Hello and welcome to Livewire's C-Suite reporting season coverage. I'm Sarah Allen and today I'm joined by BHP's Chief Financial Officer, Vandita Pant. We're going to be discussing BHP's latest results and what you can expect from BHP in the coming year. Vandita, thank you so much for joining me today. To begin with, can you take me through the key highlights from BHP's results?
Absolutely, Sarah. Great to be here, by the way. What a great set of results we have announced today. Very pleased with that. Our underlying profits are up 2% year on year, and earnings per share are also up 2%. And all that is happening because we have some incredible assets, but also our teams really do a great job in operating them really well with cost discipline. And of course, we are executing on our growth options, being very focused on how to be disciplined around capital. Our operations running really well, and that is coming through across our assets. WAIO, our Western Australia iron ore asset, again has had a production volume record, fourth year, and continues to be the lowest cost producer of iron ore globally. And this year has extended its lead to the nearest competitor. In copper, we have had a second consecutive year of 9% growth, and next year we are forecasting another 4% on top of it. Overall, what this means is that we had operating cash flow of more than $20 billion, and that allowed us to reward our shareholders with the $7.4 billion of dividend, which in today's Aussie terms would be $2.16 for 17 million shareholders who hold us either through their supers or directly. So very pleased about our results today, Sarah.
So whilst that was still a blockbuster dividend result, it was 14% lower than the past because BHP is investing in the company. But given the past, would you also say that investors should consider this a normalisation?
So Sarah, this year's full year dividend is the fourth highest dividend in BHP's history. And in the last 3 years, including this dividend, we have returned $42 billion of cash to our investors as dividends. So we remain very cognizant that dividends are a critical consideration for our shareholders, and hence every 6 months when we look at capital allocation framework, we maximize value-adding growth but also robust cash returns like dividends to the shareholders. Every 6 months we do that based on the performance and outlook for the business. And by the way, our balance sheet is in great shape as well. Net debt of only $9.1 billion, which means we have a lot of financial flexibility as we go on the journey to have value-adding growth, but being mindful of how important dividends are to our shareholders.
Okay, so turning to iron ore, it's had a challenging couple of years and of course Chinese demand is weakening somewhat. What are your projections for iron ore's outlook?
So iron ore is a fantastic business for BHP. But if I talk about the commodity outlook, for many years now we have said that we think that China's steel production is plateauing. But it's plateauing at a very high number of 1 billion tons, which is what we are forecasting that it will produce this year as well. But as steel continues to plateau, which means pig iron will plateau earlier. And with more supply coming in medium term and long term, it means that this commodity of iron ore will be more competitive going forward. And that is exactly the reason why our focus really remains on being really at the lowest end of the cost curve. By making sure we are the lowest cost producer of iron ore means it will be a great business with huge margin continuing to happen.
How do you expect this outlook to impact on the revenues that BHP generates from this segment?
So as I mentioned, even if there is volatility in iron ore prices, given we are the lowest cost producer of iron ore, the margin in iron ore is very high for BHP, highest in the industry, and that is really important. If I take you back on how to think through market dynamics and volatility in the sector, think of what cash flow BHP has generated, operating cash flow, over last 15 years. Over last 15 years, BHP's operating cash flow has been more than $15 billion, barring 1 year. And that stability and consistency of delivery is the hallmark for BHP. And of course, with iron ore, great business as iron ore, we also have announced records in our production in Spence, in Carrapateena, amongst our copper assets. And we see a lot of growth also continuing to come from copper, which we have announced today. Very excited about it because copper is a very attractive commodity for us.
So moving further on the topic of copper, which is obviously a massive focus for BHP, and I noticed that you've got a projected spend of $7.4 billion for financial year 25 in copper. Why the focus on copper? And do you anticipate that revenues from copper will ever outpace iron ore?
So iron ore will remain a great business for BHP, as I mentioned earlier, but we are absolutely excited about copper, which is one of the future-facing commodities we talk about, along with potash. So potash project in Canada going really well. The first production will come out in 26, and it will be at the lowest end of the cost curve as well. Again, a fantastic big margin business that we are starting to will have production in 2 years' time. On copper, we are very attracted to the commodity because copper is one of those multi-use commodities. It gets used, of course, a lot in our traditional way of living, but also as the world decarbonizes, it needs more copper. On top of it, as we are seeing with the acceleration of artificial intelligence and data centers growth, that requires a lot of copper as well. If I put all these drivers together, copper demand will surge by around 70% by 2050. And that is why we are very excited about our copper resource. You may not know, but BHP has the largest copper resources in the world. And not only that, given our growth in last 2 years, we have added 300,000 tons of copper to our production just in last 2 years. That is equivalent to a medium-sized good copper company, and that's been the growth. And now from here on, what we are really excited about is our organic growth here in Australia and South Australia, where we are producing between 320 to 340,000 tons of copper today, and we're looking to double it aspirationally by the middle of next decade. And in Chile, our assets like Escondida, Spence, Cerro also will be growing, and we have given more details on that as well. Separately, you may have seen that we are closing a deal on acquisition of Filo in Argentina, which we are very excited about because that looks like can be an emerging world-class level of multi-generational copper basin. And that means we have plenty of organic growth in copper, which is really, as I said, really a critical mineral that the world needs.
But potash is another area that you're focusing on, and you mentioned that you're expecting commence production in 2026. What outlook are you watching in this space?
So potash we are very excited about because it is one of those secular mega trend based commodities. As population growth increases, as standards of living rise, as people take more and more calorie value, the potash has 2.5% of demand growth year on year as it goes. And hence, we are very pleased to have sanctioned, in fact, Jansen 2, which is the phase 2 of potash project in Canada this financial year, with 2026, the first Jansen project coming in, and by 29, the second project coming online would mean that BHP will become almost 10% of potash market and at one of the lowest end of the cost curve, which means it will be a great business for decades to come. Very excited about that, Sarah. And the project is going very well. Jansen 1 is more than 50% complete already.
Vandita, thank you so much for sharing BHP's outlook with us today.
Thank you, Sarah. Nice talking to you.
If you've enjoyed this interview, please subscribe to Livewire Markets for more of our C-suite reporting season coverage. Thank you for watching.